Good morning. It is Tuesday, January 3rd, 2023. It's about 11 a.m. on the East Coast. I'd like to wish everybody a happy new year. And this is Robert Sin at CEO Technician on Twitter, at Goldfinger on CEO.ca. And I just want to discuss some ideas or themes here on the first trading day of 2023. Some things I'm thinking about, some ideas that I have here. And I would also like to just say that I want to sort of ease into this year, not rush into it, be over eager. I think there's a high probability that at least for the first few months of the year, momentum is likely to be fleeting. And that means momentum both on the upside and the downside. Um, just here in the first hours of 2023, we have the S&P trying to get above 3,900 again, and then got sold very aggressively in the first hour of trading. And now it's just consolidating around this 3,850 level that honestly it's been trading at for several weeks. We really haven't gone anywhere in quite some time. Quite a big oscillation going on here. And, we're going to get a lot of economic data tomorrow, Thursday, and Friday, especially the non farm payrolls report on Friday morning will be quite market moving. So there's a lot left in this week. This is an important week. It's the first trading week of the new year. We have the Santa rally indicator sort of hinging on how this week goes. So far, it's not looking good for Santa. Basically, the indicator says that if stocks don't move up in the final trading days of a year and the first trading days of a new calendar year, it bodes poorly for the rest of the year. There's a lot of conflicting different seasonal tendencies, including the third year of presidential term after the midterms. Usually it's a bullish year. So if we look at the presidential and election, the midterm election cycle, this is supposed to be a good year for stocks. Um, but there's a lot of conflicting things out there. So it's hard to have a great deal of confidence in any market outlook right now. And so that's why I think momentum is likely to be fleeting. Everybody's trying to figure it out. The Fed doesn't even know what to do, quite frankly. The Fed is making it up as it goes along. So if the Fed is making it up, then we're definitely making it up too. So really, don't chase strength, don't sell short into pronounced weakness. I do believe that long term investors can continue to focus on big macro themes such as the resurgence of nuclear energy, use shorter term market gyrations, pullbacks to continue to position for these big macro themes that are taking a break in the context of long term secular bull market trends. I don't think the Fed wants to kill the economy by over tightening. In fact, I think they're quite likely to end tightening in Q1 of this year, but that's rate hiking. Quantitative tightening is likely to continue. Um, but Powell is also unlikely to cut rates as fast as markets would like. Now, obviously, that hinges a lot on the future course of inflation and labor market data. So far, the labor market is holding in quite strong due to some major structural shifts of the last few years. There's just not as many workers in the labor force as there have been prior to COVID. And that's likely to not change a whole lot or not change quickly. So the labor market is going to be sort of a lagging data point. The non farm payrolls are likely to lag what is actually happening in the real economy, lag by 2 to 3 months at least. So the Fed is making its decisions on a lot of backward looking data. It's looking in the rearview mirror a lot, but they're likely to really slow and then pause tightening early this year. So they'll have they'll buy themselves some time to let the data catch up by, let's say, April or May or June of this year. A recession is likely. I mean, it just is, even though everybody sort of agrees on that. It's a self fulfilling prophecy in a lot of ways. The speed with which global central banks have tightened monetary policy in the last year is virtually unprecedented. So, yeah, we're likely to be in a recession already, or about to be in one very soon. However, the depth and the duration of the recession is highly uncertain. So that's something that's going to be really important. How deep is it? How long does it last? Is it fleeting, or is it going to be a protracted, economic downturn? And this is why I don't feel that confident in making any bold macro calls or making any big market bets at this point in time. Sentiment changes quickly in the current market environment, and that's likely to only continue to speed up. So it could be Tuesday, everybody is bullish, and by Friday, it seems like everybody's bearish. And that cycle is going to repeat over and over again. We don't want to get too caught up in short-term sentiment gyrations, especially if you're a long-term investor. Tesla continues to be a huge question mark. This is such a controversial stock, controversial company, very difficult to value using fundamental valuation techniques. And it's in a very steep downtrend, a precipitous decline by any measure. And Tesla was one of the bull market darlings of 2020 and 2021. It topped in November of 2021 and had a dreadful year in 2022. And it's just hard to see how the broader stock market will bottom if Tesla keeps dropping 10% every few days or every day. This stock needs to put in a bottom for the S&P to put in a sustainable low. Yes, the S&P is well off of its low from Q4 of last year, but it doesn't seem like a firm bottom is in place, right? And that may still come to fruition very soon, but at this point in time, it remains very unclear. And Tesla is dropping 11.5% on the first trading day of the new year. So not adding any confidence to uh, bull market calls in the stock market. Tesla has led in the past, both on the way up and on the way down. So who's to think that this time is any different? Turning to the mining sector, more specifically precious metals mining, will we get more M&A activity in 2023? That is probably one of the big um, tenets of any bull thesis for the gold and silver mining sector in 2023 is M&A. Just fewer companies to buy, uh, buyouts at premiums, lower overhead, lower corporate overhead, and higher profit margins. Also, cost containment. Definitely, inflation has cooled off a lot in the last several months. We've seen oil move down. We've seen natural gas move down. Labor wage growth seems to be slowing, so this should all benefit minor margins, especially with the move up in gold and silver we've seen in the last couple of months. But will these companies deliver the earnings that everybody wants to see from them, or will they continue to disappoint with cost overruns and just kind of mismanagement? Um, and then finally, the resurgence of nuclear energy. This is really one of the few clear secular trends I see today. A lot of fundamentally positive news for the nuclear energy sector in the last year. Obviously, the war in Ukraine has been a big part of that, as Europe has had to sort of do an about face, a pivot on its nuclear energy policy, seeing that it has a few good options to have energy sovereignty and to have cheaper, uh, more, reliable energy. um, so a lot of clear positive catalysts in the uranium sector, strong fundamentals, new utility contracting cycle is underway. China is building a lot of nuclear power plants, and then the Sprott, uranium trust taking a lot of supply off the market. But just simply put, this is a long-term secular bullish trend that's not going anywhere anytime soon, but it's going to play out in a longer time frame. So if you look at the URA chart, it had a very strong bullish impulse higher in 2020 and 2021. It's taken a break in 2022. Maybe this break continues for another few months. And then at some point in 2023, I see this pennant, this bullish pennant breaking out to the upside. You have this black dotted line here as a clear area, a line in the sand. That's your downside, reference point, stop loss, call it what you will. Obviously, if price breaks under that, the thesis is in trouble. But as long as we're consolidating above it, especially if we break out from this pennant, the bullish trend is very, very much intact. We talked about Tesla, the S&P. So the weekly candlesticks to end 2022 had pretty large bottoming tails. They formed doji, so a lot of indecision in the stock market as we enter 2023. How this week plays out will be very important. I don't want to overstate the importance of 1 week, but I also don't want to understate it. It's an important week. And how this shakes out uh, will probably foretell at least the month of January in terms of trend. If we have a big down week to kick off the year, that's probably not a good omen. If we have a bullish engulfing candlestick, for example, and close above the 50-week moving average, that could be a very positive sign. Um, that could bode well for the month and for the year. Cameco, so this is diverged from the S&P 500. So this is one of the keystone stocks in the uranium sector. One of the simplest ways that larger market players, hedge funds, could play the resurgence in nuclear energy, and it has done well the last few weeks. But remember, it is obviously affected by the global macro landscape and global economic activity. So it will gyrate as it has. But I feel like this consolidation is setting the stage for that next leg higher, which could be, quite powerful, where you could see a move up of 50% or more in the uranium sector as measured by the URA. And obviously, Cameco would be a big part of that. Um, Gold miners, they have started to grind higher, consolidating nicely in the last several weeks, whether you look at NEM or GDX. I like to buy them in the consolidation and sell them into a nice breakout. So they're still in this consolidation phase, generally speaking. But I really caution against chasing strength in the precious metals or mining shares. That generally has not worked well. It's a losing strategy to buy breakouts in these sectors. So you want to buy weakness, you want to maybe buy in the consolidation and then sell into strength. Remember, momentum is likely to be fleeting, so we don't want to chase momentum. The momentum market of early 2021 is long gone, and we're in a very different environment right now as the Fed continues to fumble around to try to engineer a soft landing while looking in the rear view mirror. So it is a treacherous overall market landscape, one in which being a little cautious and warming up into the new year is the way that I prefer to go. So, with that, I'll conclude this video. There will be more to come over the coming days and weeks. So, have a great start to your new year, and I'll see you soon.